Hello, my name is Sally Gimmon, and I'm the owner of the TrustIsYou.com and a podcast called Stop Paying Capital Gains Now. The reason why I do this is because I want people to know how they can save on their taxes. The Spendthrift Trust, and I want to talk to you about how you can save federal taxes. Now, I'll give you a little bit about myself. I became a real estate investor after my mom got sick, and back in July 2020, I took down a bank-owned reverse mortgage. I paid $20,000 for the contract, and it was going to go for auction for $50,000. All I had to do was pay $20,000 and go to auction and make a $30,000 spread. Easy peasy. But it was in the middle of COVID, and I had to wait 13 months because all the court systems were closed. So I knew my personal tax rate at the time was 24%. So that $30,000 would have been about $7,100 in capital gains. Well, in my national real estate group, there is a gentleman named Garrett Gunderson. He wrote a book called What the Rockefellers Do. He's changed the title now. It's now called What the Billionaires Do, but I have the original copy, What the Rockefellers Do. My background, competitive intelligence and insurance, I went through that book and started calling people, contacting people, and doing all kinds of things to find out how I could save capital gains. I found the private law firm in Texas, became their client. I did two very simple bill of sales. One bill of sales said this 4-bedroom, 1-bath house in Rocky Mount, North Carolina was going from my LLC to me, Sally Gimmon, in my own name. Second bill of sale said Sally Gimmon is selling Rocky Mount, North Carolina property to the trust on such and such a date. And then I tendered $10 to the person who notarized it because there has to be consideration. Took the two bill of sales that were notarized, sent it to the attorney in Raleigh, North Carolina. I'm living in Phoenix at this time. The only thing the attorney in Raleigh, North Carolina asked for is a copy of my trust. Sent that the next day. When it finally did go to auction, August 28th, 2021, my little house started at $50,000 and went up to over $64,000. Yay, Sally, I made $44,000. But better yet, I saved $10,550 in capital gains. Hence the title of my podcast, Stop Paying Capital Gains Now, with an exclamation mark. Now, the Spendthrift Trust is legal, patented, and in the IRS Tax Code 643B, like Bravo. It comes from England way back when King Henry VIII started the Church of England. He got in trouble for chopping off his wives' heads. He went to go tax the lords and ladies of England to pay for his new church. The lords and ladies of England went further back in history to the Magna Carta and said, no, King Henry VIII, you can't do this. So this is contract law from England. It came over to our shores while we were still a colony. The law firm I work on behalf of has a trust that is turning 350 years old in 2023. So this is before we were even a country. Now, most people do not realize the U.S. tax code was only designed in 1913 when we were getting into World War I. It was supposed to be a temporary tax code to pay for going into the war. Now, the rich families like the Rockefellers purposely wrote the tax code to be in favor with them. They have the money, they can do what they want. So this is way up at 643B, like Bravo, and most accountants and CPAs work in the 300, 400 level. I would never be an accountant. I'm dyslexic and I transpose numbers. So God help them, they have a great job. I don't want it. So with this trust, it's in the tax code. It's been in front of the United States Supreme Court twice. Both times the Supreme Court has favored for the Spendthrift Trust. Now, most people can say, hey, this does not sound like it's real. I have case law I can send to you that shows how honest this is. And then I also have a book recommendation. This is a textbook that trust attorneys study in law school. Only a select few, only about 3% of all attorneys in the United States are trust attorneys. The title of the book is Scott and Asher on Trusts, 5th edition. The last time it was on Amazon, I think it was $279. It's a thick book, but hey, if you want to read it, please be my guest. So I do break the trust. There's 4 separate trusts that we're going to talk about. The 2 main ones. The first one is the business trust for 1099 income earners. 1099 income. You could be an IT contractor. You could be a real estate agent. You could be an affiliate marketer. You could be a coach. You could be a salesperson. I run 3 online stores through my business trust. I do not bring anybody on live on these on this TikTok because the last time I did that, the person was naked. Never again. So the business trust, just to give you an idea, this is a true client of mine. She's a real estate agent here in North Carolina. She is divorced, so she's filing single, and we're looking at her 2022 tax information. She says she's going to do much, much better in 2023. She's got 4 houses on the market right now. So in 2022, she made $70,000. She was at the 22% tax rate, and looking at all this, her tax rate that she would be paying taxes on would be $7,960 because she's a 1099 income earner. She would have to pay the federal government. With the Spendthrift Trust, I can legally say she's going to save at least 70% every year on her taxes. She's going to save $5,572 or more with the Spendthrift Trust. She right now has 4 houses on the market. She plans to sell them all to do that and make more money on this. So that's one example. Another example I have for 1099 income. It's a husband and wife. One's an affiliate marketer, and the other one is a coach. So this is their 2021 numbers because they're still doing their 2022 taxes, and this is 2023 information. So a little bit confusing, but we're trying to give them the information. So in 2021, the couple filed jointly. They made $200,000. They're at, oops, I want to make sure I give you the right thing. They're at the 24% tax rate. So what's going to happen is with all the information they have, before they have the trust, they would be paying $34,800 in taxes. With the trust saving them 70% on their 1099 income, they're going to save at least $24,360 year after year. Fantastic thing. Now, the beneficial trust, this is for all investors. I don't care if you're a passive investor, a real estate investor, crypto miner, you're in the stock market, you're a day trader, options trader, doing forex investing, you have NFTs, you have royalties, you have oil wells, anything else. The beneficial Spendthrift Trust is going to save you the following taxes year after year after year, generation after generation after generation. You're no longer going to pay capital gains, short term, a year or less, or long term, that's 15 or 20%. I just helped somebody sell an HVAC company. He's got bursitis of the knees. He's going to get on Social Security disability early. He's 62. So at 15%, we're going to save him $255,000. That would be due April 15th, 2024. Or at 20%, we're going to save him $340,000 in capital gains. That would be due April 15th, 2024. As his wife says, this changes our retirement. That's 6 figures savings for the husband and wife. Legally done, everything else. Their business broker brought me this case. The business broker made $600 for an affiliate fee. And then he also brought the client who bought the HVAC company. He told them about the business trust. So the business broker actually made $1,200 on that. Congratulations to him. Another, so that's short-term and long-term capital gains. My little house, the auction house, that was short-term capital gains because it went to auction, and then that's when my name got on the contract. Yes, there was a 13 months delay, but my name was not on the contract until it went to the auction. Next one, interest income. If you're a forex investor, a passive investor, a burr strategy, doing notes like I do, that's interest income. True client of mine, 3 years in a row, he went to his CPA saying, I'm paying too much in interest income. He's doing the BRRRR strategy. Buy, rehab, refinance, redo, the BRRRR strategy. He has 85 homes in Texas. 3 years in a row, he went to his CPA saying, I'm paying too much in interest income. His CPA, 3 years in a row, said to him, stop buying so many houses. Who tells you that? You want to be doing a whole bunch more. So what we were able to do, his friend told him about me. We were able to save him and his wife $135,000 in 2022, and then he bought 5 more BRRRR properties, so even more money in 2023. This changes their life. All this money, when they have the house, when they have all this real estate, they can do what they want with the money. Now, with the beneficial trust, I do have to give you this caveat. With the beneficial trust, it does not cover personal, food, fun, and fashion. So what you're going to do is take the cost value of what the original house was, and then you can write a demand letter up to that amount. My car, nothing fancy. I bought my car brand new in 2015 for $27,500. Currently, it's not worth that much, but my car is in the trust, so I can write a demand letter up to $27,500 tax-free to pay for my food, fun, and fashion. Dividend income. A gentleman I met at a Rainmaker conference inherited his dad's portfolio, 100 shares of the top 100 companies that pay dividends. Every quarter, he makes about $80,000 in dividend income. Every quarter, he's got to pay about $17,000 in dividend income. We're saving him that every single year. So let me do my calculations because I didn't do them correctly. I've got my little calculator out here, so let's do this. 17,000 times 4. We're saving him over $68,000 a year in dividend income. Yes, he had to get a medallion and get it to his broker, and yes, his broker had to change the title on each of the stock certificates. There's a little bit of work. It's not like legally split, but it's not hard to do. Rental income. If you have short-term, Airbnb, traveling nurses, students, or long-term, maybe you have 10 doors, 20 doors, multifamily, multi-apartments. Yes, you can still take depreciation. No one's going to stop you from doing that. But with either the business trust or the beneficial trust, the 3 ways it's going to save you money. Federal taxes, it's going to keep your information private. It's going to do away with all the LLCs, S Corps, and C Corps. That's statutory law, and that they cannot be held in the trust. So no more K-1 filings that are due March 15th. And then you can have all your property in the trust. And then for renters, the other thing it's going to do for people who have rental income is save federal taxes, keep your information private, and you'll pay no judgments if you get sued. The old adage from Nelson Rockefeller, own nothing, control everything. So if one of your renter's dogs gets loose and bites somebody, or somebody falls down the stairs or slips on the ice, they can sue you, the individual, but you have no money, and the lawsuit goes away. Then there's going to be, we did interest income, we did dividend income, we did rental income, and then royalties. Royalties could be an actor, an actress, an author, a songwriter, a musician, NFTs, NFT crypto, NFT real estate, NFT artwork, or mineral rights, oil wells and mineral rights. Also, I get paid for selling the trust as a royalty, so I don't have to pay taxes on it. Woohoo! Love my job. So again, that's the beneficial trust. The business trust for 1099 income earners, the beneficial trust for investors. There is a charitable trust. If people want it, they can have the charitable trust. Most of my people are out about making money right now. They don't need the charitable trust. And then the 4th trust I want to talk to you about is a very special trust for people who are over 65. There is a thing called IRMA. If you make more than $91,000 in a year, IRMA is, I have to look at my notes, so excuse me, income related monthly adjustable amount. This coming October, the IRS is going to be looking at 2021 1040 tax returns. If you made more than $91,000 in a year, it could come from Social Security benefits. It can come from pensions. It can come from 401k withdrawals, IRA withdrawals. It can come from wages. It can come from capital gains, interest income, dividend income, rental income, or royalties. You're going to pay more for your Part B Medicare. Part B is your doctors and your tests. Right now, I might be giving you the wrong numbers, so if I am, please forgive me. Right now, I think in 2023, people are paying $166 for Part B from their Social Security. If you make more than $91,000, you'll pay a higher amount. And if you make more than $170,000, you're going to start paying the federal government to have Part B. You do away with all that because when you have either the Business Spendthrift Trust or the Beneficial Spendthrift Trust or the Over 65 Spendthrift Trust, you're going to file a 1041. The IRS in October will not be looking at 1041s, and all your information will be kept private. If I can help you save money, again, my name is Sally Gimmon. My website, thetrustisyou.com. There's free education that I will email you about the trust, going over the slide deck. You can watch it on your own time. You can set an appointment with me to start saving money. I also go live every Monday night, 8 p.m. East Coast time. I do a live Q&A, answer questions there. My podcast is Stop Paying Capital Gains Now. I found out about this trust for myself. I teach in my mastermind, my real estate group, and I want to help as many people save as much money as possible. I'm not making fun of people, but there's a safety net for the poor people. The rich know this, and it's the middle class that's getting squeezed in between. If I can help you save taxes, please reach out to me. You can schedule an appointment at thetrustisyou.com. Thank you for watching this, and I hope you all have a beautiful weekend. Stay nice and cool. Take care. Bye-bye.